你好，我会说一点儿普通话，可是我说的不好。So I'll continue in English. Nali. Now, before I start, if anybody would like a copy of the presentation and would like to read along while I'm presenting and not take notes, you go to the website address, you can download a copy for free, so it's there if you want it. So I'm Tim Merel from DG Capital. We're an investment bank for apps and games. Now today we're going to talk about everything to do with money and apps. So starting with revenue, we forecast that apps will hit over $70 billion revenue globally within 4 years, and that whereas today about 3/4 of the revenue comes from mobile games, we think about half of the revenue within 4 years will come from other app categories. Mobile apps investment has doubled in the last year. There's been around $10 billion invested in mobile apps globally in the last 12 months. Mobile apps M&A hit a record of over $35 billion in the last year. If you take the Facebook WhatsApp acquisition out of those numbers, it's still over $16 billion, so very high M&A. We track public companies. The overall index of public companies in mobile globally is growing. So there's significant differences between app categories. Some categories are growing very rapidly, others have been declining. When it comes to valuations for both public and private companies, we're seeing significant variation relative to economic performance. Free downloads and in-app purchases account for over 90% of revenue globally, but we're seeing app as a service, so software as a service style models emerging for apps. And then lastly, we're seeing billion-dollar companies emerging at an increasingly rapid rate, and so our view is that now is the time to either invest for growth or look to be bought. So let's get into some of the detail. So mobile apps, we forecast, will hit over $70 billion within 4 years. And what you'll see is that last year, around 3/4 of the revenue, in dark blue, was from mobile games. Going forward, we think that's going to change significantly. We still expect a lot of growth from mobile games, but we expect all the other app categories to grow far more rapidly. And the reason for that is partly due to usage. Mobile has grown overall usage of media overall, so it's grown the market, but also it's cannibalized a lot of other media. And interestingly, if you look at the cannibalization in terms of both long and short-term growth, you see that online is actually being cannibalized far faster than TV, which isn't really surprising when you realize that mobile is a very easy substitution for what you get online. Now, we talk about investments, and all the brightly colored bars are all the different app categories and the amount of investments that's gone in. What you see is that investment has doubled in the last year. We're seeing some hotspots for investment, but in general we're seeing all of the app categories seeing increased investment globally. All of the transactions that sit under this graph are all sitting in the review, so again, feel free to go to the website and have a look. When it comes to M&A, we've seen over $35 billion in the last 12 months. Now, obviously there's a very big spike from Facebook and WhatsApp. It's a spectacular transaction. So if we take those numbers out of the analysis, what you see is that there's been an ongoing trend, really for the last 3 years, year on year, there's been growth in acquisitions. Now, we'll come back to some of the reasons for this in a second, but basically it's been across categories, there's been some hotspots, but there's a long-term growth trend to acquisitions, either generally for strategic growth or sometimes for defensive maneuvers. And again, all of the transactions for M&A are in the review. Now, when it comes to the valuations, we've seen very strong variation in terms of what's happening in the market around different app categories and how they're being valued. In some cases, it's been quite extreme. We've seen variances from the average of up to 1,000%, so up to 10 times different to the average compared to the revenue or the profits of those apps and app categories. So very extreme ranges. Now, given the early stage of the market, it isn't completely surprising. You do expect some of this, but the breadth of the ranges in some categories is quite amazing. When it comes to the public markets, we track over 50 mobile apps-related companies globally that are on public markets. If you look at the red line, the All Apps Index, you see that it's been gently trending up over the last couple of years. And so there's growth overall. But again, when you look within the categories, what you see is, again, quite strong differences in performance. So some categories, like say messaging, has been performing very strongly on the public markets. Other categories have not been doing as well. And again, if you want to find any of the data around the valuations I was talking about before, or tracking this, whether it be comparable to revenue, profit, earnings, they're all in the report. So, when we look at public company valuations, comparing to what we were looking at before, what you see is quite a lot of variation in valuations as well. Now, it's not as extreme as what we've been seeing in relation to the private acquisition market, which again, you would expect. Public markets tend to be a little more ordered. But you're still seeing some app categories really varying quite widely compared to their revenue and profit performance. So our take on this is that not all app categories are created equal in the minds of investors. Now, some app categories are doing very well in terms of private and public markets because of the perception of potential future growth, others because of underlying economic performance. But when it comes to investors, acquirers, or people who are trying to build their app companies globally, keeping in mind some of the inefficiencies in the market can work to your advantage. It can also work in the opposite direction. Now, by platform, I'm not telling anybody in the room anything they don't know. Globally, iOS generates more revenue, Android more downloads. There's variations by market, particularly when you move away from the Western markets, you get a lot of variation. But broadly speaking, iOS tends to monetize better than Android. But again, when you're talking about Android and doing the comparison, people will often only compare Google Play and Amazon's App Store with iOS. You need to look at all of the app stores on a global basis to get a real picture as to what the Android market looks like. So it's a very good market in itself, but very different dynamics. Now, when it comes to in-app purchases, they dominate revenue, over 90% for both platforms. But when you look within that and look at how in-app purchases work, you might remember at the start I mentioned that around 3/4 of revenue was coming from games last year in mobile. But if you look at the number of downloads, it's averaged around 40% of the market have been mobile games downloads, but around 3/4 of revenue. So when you look at the in-app purchases and run the numbers, you see that in-app purchases work 4 times more effectively for mobile games than they do for all other app categories. So flip that around, what it basically tells you is that in-app purchases don't work as well for the other app categories, and you can see some of the variation in terms of where the money's coming from. So going forward, what we're beginning to see emerging is app as a service. So taking software as a service style business models and applying it to the app market. So to give a simple example to make it a bit more real, if you think about a game like, say, Angry Birds, most of the fun you're getting is from the game on your device in your hand. There's not that much interaction in the cloud with the internet. Most of the value is there. And so in-app purchases work very well. If you think about, say, Dropbox, it's a very thin client, it's a thin app, but most of what you want is out in the cloud, it's out in the internet, somewhere else. It's a free app, but then when you get to a certain level of usage and you want to actually go above that, you've got to start paying on a monthly basis. So we think that sort of approach, increasing emerging in a range of categories, has the potential to enable monetization more in line with downloads and usage. So to give you a graphical representation of that from leisure apps to practical apps and from standalone apps to more app-as-a-service approaches, this is last year. The big blue blob is games. Standalone games, the bulk of that, most revenue, lots of other little dots with all the other app categories. Looking forward to in the next 4 years' time, to 2017, we still expect growth in games. It's still a big part of the market. But we're expecting far higher growth from all the other app categories. And we think app-as-a-service is going to be part of that change going forward. Digging within that into the actual metrics within apps, we put together a large data set, and again, all of the numbers for that are sitting in the report, so you can have a look at that if you wish. If you analyse the numbers, you can see there are specific metrics against which top 1% of apps outperform top 5, top 25, and so on. You can see what metrics you need to hit and the absolute numbers, and we're seeing performance in some cases 50 times better by top 1% by revenue apps than other categories. billion-dollar companies are emerging much faster, so you see both the scale of value being delivered, but also the pace. And we're seeing a direct relationship between apps moving faster and faster, companies delivering more and more value. So there's a changing pyramid of consolidators. The big deals have been from either strategic growth moves, but also some defensive moves, which are understandable. But we very much see today's growth companies as being the consolidators, the buyers tomorrow. And so, to bring it to a close, we think if you look at the stage of development in terms of consolidation of the different app categories, we think now is very much the time to either invest for growth or look to be bought. If anybody has any questions, feel free to contact us. Download the report if you wish. I'll come to the back of the room if there are any questions at the end. Thank you very much.